Good morning, everyone. I think we'll get started. It's 10:01, and we generally work very hard to keep these things on time so that people don't spend any more time on Zoom than they have to. I want to welcome you this morning to this morning's Navigating COVID-19 webinar. I'm Kent Roberts, the VP of Policy at the Halifax Chamber of Commerce, and your host for today. This is an interesting webinar, and we've got quite a few people signed up for it, as you can imagine. Taxes are a question we always ask ourselves at any time of year, but particularly in light of what's happened in the past few months and in light of COVID, we thought it was very valuable to have some experts in to talk to our members about tax implications in the coming year. I'd ask you to, if you have questions, you can either put them in the Q&A, which is what we would prefer, at the bottom of the screen on Zoom. You can certainly put them in chat as well, and we'll keep an eye on that. I will sign off during the presentation and then come back in and facilitate the Q&A at the end. So I'd like to welcome our friends from H&R Block this morning. Our presenter will be Crystal Carignan, who is a tax associate from H&R Block with 5 years of experience in personal tax preparation. Crystal has been part of the post-assessment team and teaches new students the basics of tax preparation each fall. She has a wealth of knowledge to share with us today, and we're really happy to have her joining us. Crystal's also joined by Julie Coleman and Raylene Hopkins from H&R Block as well. So when we get to the Q&A portion, we'll have a significant team there to answer any questions that you might have. So at this point, I'll turn it over to Crystal. And again, thanks everyone for joining, and we'll chat with you very soon.
Thank you very much, Mr. Roberts. Again, my name is Crystal Carignan. I have a bit of experience here at H&R Block. Today's focus really is on claiming your home expenses. A number of us, including my husband, had to work from home when times changed. So we're going to talk about the requirements that you're going to need in order to claim your home expenses. We're going to talk about what you need to complete on your tax return. That's your T777. We're going to talk some more about deductible expenses, and we're going to talk about the supporting documents that you're going to need in order to support your claim for your employment expenses. Just a few things. Your employer needs to fill out this T2200. Just because your employer fills this out, it doesn't necessarily mean that your claim will be accepted. Employers often send this in and they haven't read the Income Tax Act, or they're claiming things that shouldn't be on the employment expenses. For example, internet. You assume that, step one, I need internet to work from home, but that's not the case. And some employers are putting that down on the T2200. Just another note, so this T2200 helps us complete our T777. The first section is Part A, so that's pretty straightforward. We're going to put our employee information there, last name, first name, social insurance number, and their job title. Very hard to see, but we'll do a little bit closer up of the important points. But there at number 1, we need the employer to answer yes to that question. That says, did this employee's contract require him or her to pay her own expenses while carrying on duties of employment? You'll note there that it does say the employee's contract. So it was at one time that CRA required that the employment contract also detailed what's here on the 2200. But if you can show that you had a common ground with your employer, you needed to work from home, especially under these circumstances, the T2200 will be sufficient. I'm not sure if we have any commission employees, but if we do, I think we need to talk about that a little bit at the end. And we would go back to step 2 there, question 2, for our commission employees. Question 3 really is about travel and other related things, so we're going to skip through that. Question 4 there is important. It says indicates the period of employment during the year. So, that kind of is in the air. CRA uses that to determine whether your expenses fall within the window of your employment working from home. So I would recommend to an employer that's completing question 4 to put the time that the employee was at home. So CRA can use that to gauge whether the expenses were okay. On the next page, again, that's for commission employees. We'll get back to that. Really important though is number 9 and 10, and we're going to do a close-up of those in just one moment. But at the end there's an employer declaration. It's really important that the employer puts down some contact information for CRA in case they have any questions. So here's a close-up of our question 9. So it's important that the employer marks, yes, this employee needs to rent an office away from your place of business. Has to be there. You are able to employ a substitute or assistant, which means that you can claim the wages of that substitute or assistant and any employer portion of that EI or Canada pension plan that you might have paid out. They must click yes if they want to claim any supplies. So supplies include stuff that's used to do your job, things like pens, pencils, paper, street maps, directories, stamps, and stationery. And if they needed to use their cell phone, and we'll get into a little more detail about cell phones, they need to mark yes as well. The next question says, will you reimburse the employee for any of these expenses? So if there is a reimbursement, you really need to put the amount and the expense and whether or not it was included on the T4. If you do include it on the T4, it won't be deducted from the employee's claim. If you gave them a non-taxable allowance or you did not include it on a T4, we need to deduct that on our form to show that, yes, I did pay for it, but I was reimbursed by my employer. The next question is also very important. In order to claim the work at space home, you must have done more than 50% of your duties at home, which means that as an employer, you need to put 51% there in order for the home expenses to be able to be claimed. Again, any reimbursements need to be told. And if you see at the bottom of the slide, you have to perform more than 50% of your duties at home or meet with clients on a regular and continuous basis. It doesn't necessarily mean that your clients have to come into your home. It could actually mean that you're doing phone calls. And in COVID-19, I'm sure we're probably doing phone calls. Okay, so we've got our T2200 completed, but what do we do with it? Well, we need to complete a T777 and fill it out for our tax return. What we come up with on the T77 is actually what you'll deduct on your line 229 as your employment expense. So I just want to talk briefly about what you can claim. It's laid out here. So electricity, heat, and water, maintenance, and only commission employees can claim their tenant insurance or other insurance or property taxes. And if you own your home, you cannot claim rent. I'm very sorry. It's only renters that can actually claim a portion of their rent. So I just wanted to talk briefly about electricity, heat, and water. So that does not include your internet. That does not include your cellular phone. This is very basic. There's only electricity, heat, water, maintenance, and rent. That's it. If it's specifically outlined for the cell phone, you can do the cell phone, but that's it. So if your employer put anything else, it's not going to happen for you, unfortunately. Okay, so we've got our electricity, our heat, and our water. We want to claim it. So we put the total amount of the claim on the tax return. So you want to use the time span of when you started working from home and the end of the calendar year. You put the total. We don't break it down, so we want the whole amount. Maintenance, I had a note. So maintenance can include things like light bulbs, cleaning materials, minor repairs that you did on the space. Again, no insurance, property taxes, mortgage interest, okay? Other expenses, rent. So we want the total amount of the rent for the time period that you were working from home. We add up our expenses and we come to an amount. The next line says subtract the personal use portion. Okay, so this is really important. I do reviews in the summertime, and I've had clients reviewed for these. And what the CRA asks for is a floor plan. It doesn't have to be perfect, doesn't have to be from a construction company. What they want you to do is draft out the space in your home on a piece of paper, detailing, 8 feet by 15 feet. And what they want you to do is portion out the space that your office takes in that home. For example, if you have 1,000 square feet, your office is taking up 100. You're looking at about, 10% is your office space, and 90% is your personal use portion. The other point to that is if you are also using the space for personal use, you have to also prorate for that as well. So if we take our 10% space, but we say, hey, CRA, I work 8 hours a day, but I'm on Facebook at night 8 hours a day, we can only do 50% of that 10%. So really what we're looking at now is you're going to say your personal use portion is 95% of your expenses. We can go over that some more if some people have some questions about that, but it's backwards. So you think that you would put how much you're using, but no, they want to know how much of these expenses relate to your personal use. The amount carried forward from previous year, and there's a note here at the bottom line as well. So workspace in the home expenses available for future years. So what that's saying is that your employment expenses cannot exceed the income that you earned at the job. So what can happen is sometimes you start a new job at the very end of the year. So you have a whole month of expenses, but you don't have a whole month of salary. You might only have 2 weeks. You can't cause yourself to be in a negative salary situation on the tax return. So what we do is we carry forward those expenses for you to use the next year. So if you have some of those expenses that are left over from last year, this is where you want to record, I didn't get to use these last year because it exceeded my income. I want to use it this year. So we add that up, and then we report our employment income. Now, when your employer filled out your T2200, hopefully they put the name of their company, and that's going to be matched to your T4 that you get from your company. So we want to make sure that you don't exceed box 14 of your T4 in that line of your employment income. The next part says we need to subtract the amount from line 2, the amount on line 207 and 212. 207 is your registered pension plan. You'll find that on box 20 of your T4. And that means that we're already deducting some money from our employment income. So maybe our box 14 says $60,000, but if you've contributed $1,000 to your registered pension plan, we're going to only be able to deduct up to $59,000. Line 212 is union dues. That also gets deducted from employment income. So really what they're looking for is your net income after you've deducted your registered pension plan, which you're going to deduct on your tax return, and your union dues. I hope that's clear. I do apologize. I'm new at Zoom, so I can't see any chat, but I'm sure we'll have some questions at the end if we need it. Okay, so we've come up with our number. Okay, so in this example, our available employment expenses is the lesser of 24 or 25. Well, I'm saying, hey, I didn't hit my income, so I'm going to claim $1,920. Where do I put it? So I'm completing form T777, and you'll see at the very bottom where I have the arrow, we're going to add our work and space expenses there. Okay, and then we're going to total it up, and you see at the bottom, enter this amount on line 229 of your tax return. So again, just a review of what's allowed and what's not allowed. So heating, utilities, yes. If you're a commission employee, yes, you can claim that as well. You cannot claim your insurance, but if you're commissioned, you can. No property taxes. So what we're seeing is a lot of employers think that these things can be deducted, and they're allowing it on the T2200. And again, it doesn't mean that you're actually allowed based on the Income Tax Act to deduct these things. Okay? It's important that you keep your records, and I will tell you that there is a team at CRA called the Special Assessment Team, and they want your originals. So please make sure to keep your original records, no matter how faded they get. Keep them there. If you have copies, send that along too if you're ever under review. H&R Block helps a lot of people with these types of reviews, and we'd be happy to help you if that ever happens. They, CRA frequently checks these things because they're honest mistakes a lot of the time. People thought they could claim their internet. They couldn't because their employer put that they could. So, and then, you know, it's not the easiest calculation to show your space at home and the percentage that you're using it. So reviews can be done before the tax return is assessed by the government and they give you a refund. That's called a pre-assessment. If they give you a refund and they decide to look at your return after, that's called a post-assessment. Okay, I just see a question. I don't mind answering it because I think we're doing really well with time. So what you need from your employer is a completed T2200. I hope everyone hears that. Your employer needs to fill out that T2200. They need to answer yes to the question that you had to claim your employment expenses. They have to review questions 9 and 10 to just detail that you were allowed to claim home office, and they need to complete the last section detailing who they are, their employer, and any information that CRA needs, in case CRA needs to contact them. If you don't have the documentation, you will be denied your claim. And the trend is that, you know, after 3 years, if they haven't bothered you, you're probably okay. But they can go back 3 years if they choose to, but we find that, at least in our experience, they tend to go back about 3 years at the most. If you do not do well in that review, though, I can guarantee that they may go back farther to see how long you've been making this honest mistake. Your receipts, okay? Again, keep your originals, please. They ask for that. The date you made the purchase, the name and address of the seller or supplier, your name and address, and a full description of the goods and services that you bought. So I've done employment expenses for people that say went to Dollarama and they had the slip from Dollarama. I would maybe send a copy of a debit statement or something to show the date of purchase. They may not allow that. They may say, no, you should have ordered from Staple or Amazon that shows a receipt that has your name and address and the date. So, you know, even though you have it, that doesn't necessarily mean they'll approve it. Depends, I think, sometimes if they're having a good or bad day up at CRA. But I think for the most part, you're going to get a human being that understands that, yes, I bought pens at Walmart and didn't necessarily get a receipt with my name and address on it. Certain employees can claim GST that they made on these purchases. I think that's a complete and separate discussion. If you are interested in that, let me know. I'll again go to that first slide just with my email on it. And if you have any questions at the end too, please ask them. So many employers are working from home because of COVID-19. Again, like I said, my husband's home. He's asking me lots of questions. What can I claim? Even if it's $5, I want to claim it. So Canada Revenue is reviewing the law, the Income Tax Act around claiming your home expenses. Our associates get a review every year. Every year we have to go in and take some training on the changes upcoming to what we've already learned. Not only does things like the home office change, but different things change, like we can't do our transit passes anymore. We can't claim our, kids' sports any longer. So we get updates every year to make sure that we're prepared for any questions that you might have and that we're completely prepared to do your taxes. I don't know if Raylene or Julie wants to talk about this, but we do second look and we give free tax advice. If you're interested in having us look at a tax return that you've prepared yourself, we will look at it at no cost. And if we do find something that we want to fix and hopefully we find you some money, we can worry about making an adjustment at that time and let you know how much that would cost and show you the benefit. So it might cost you $30, but guess what? You're going to get $500. If you have any general tax questions, let us know. We do have a special offer, and there's a link there below there that you can use to get to that special offer. Okay, I just want to duck back once more to remind everybody. Heating, utilities, insurance, property taxes, mortgage, interest, rent, repairs and maintenance. And one more thing, I know there's going to be a lot of questions about cell phones, and I just want to touch on that before we wrap everything up and go to a Q&A. I want you to know that you cannot claim your home phone. You cannot claim your monthly amount on your home phone. You can claim long distance charges. That's it. So I know most of us have long distance included, so chances are we probably have nothing to claim for long distance. For your cell phone, you can deduct the part of the airtime that relates to your use for work. Same as when I explained about the percentage of your home, you must also do that with your cell phone airtime. So you're going to say, hey, I need my phone. I have to have Skype open for 8 hours a day. Well, we're going to take 8 out of those 24 hours in the day and take those expenses. The plan must be reasonable. You cannot deduct the cost of your cell phone. You cannot deduct the hookup fee, just the airtime for the cell phone. And I'm just checking my notes one last time. Again, no internet, no internet, no internet. I hope that they do change that, because step one, to work from home, you need internet. Okay, that's everything that I have. I've been through my notes a few times, and I'd like to answer any questions anybody has.
Great, thanks, Crystal. Really, really appreciate that presentation. I've got some questions. There's one on the Q&A, which I think you just repeated several times that internet is not, but I'll ask the question anyway, because it's a bit of a variation on what you had answered. And this question is, if you're required to work from home and log into remote servers to be able to complete your tasks, which requires internet, of course, are you able to claim internet in that case?
No, you are not able to claim internet. It has not been outlined in the Income Tax Act, and that's why you cannot claim it.
Okay, I think that's pretty clear. I've got a couple other questions, and as you went through your presentations, a couple jumped out at me just from my dangerously limited knowledge of filling out tax returns. The T777, you outline pretty clearly, what you can claim, the maintenance, and so on. And then you on one of your slides, you flashed sort of the second page of the T777, and on there was some other categories. Including supplies and so on. So that page, yeah, exactly. So I'm thinking about people who had to work from home and had to buy a desk or had to buy a filing cabinet. Are those type of expenses, can they be included in that T777?
I'm sorry, no, they cannot. Again, we're looking at just home expenses. So those types of expenses are for people that do different professions than what you're looking at for a home office. There is no capital cost allowance, which is wear and tear or purchases of big ticket items that are going to be able to be deducted as a home office. Okay,
so that leads me kind of down another path, which is, so this thinking about a home office is a little different than someone who's self-employed. Is that fair to say?
Very different, very much so.
Okay, and could you touch on that? Just I don't want to go deep into it, but could you? So I'm assuming there may be some folks on the call that are self-employed and have set up a home office. So what are the
Oh,
broad differences?
okay. The difference is they can claim things like mortgage interest. They can claim all of those things that you just mentioned, a desk. So a self-employed person is a person that does not have an employer collecting their taxes and their CPP for them. In this case, the employer is collecting taxes, CPP, and actually paying a portion of the CPP. So the Income Tax Act is different for employees versus self-employed people.
Right, great. Okay, that makes it very clear for me. I hope that
Yeah,
clears it.
you're more of a business when you're self-employed, so there's more of a, I'm trying to run a business here rather than the business is already set up and I'm working for one.
Right, right. And yeah, okay. So so there'd be no T2200 and so on. So it'd be
Right.
a different path.
And
Okay,
instead of a T77, you actually complete a T2125, depending on your circumstance.
right. Okay, thank you. And again, my scary limited knowledge, when you talked about the measuring the square footage for your home office, is there also an option there to say you have 9 rooms in your house and you're using one as your office?
No, I'm sorry. What they do in a review is they actually ask you to draw out a floor plan. It can be just a sketch. They want you to write the number of feet of the space and then show what part of your office is there and write the number of feet in a review.
Okay.
Yeah,
And my last question, then I'll go back to the Q&As very quickly.
sure.
Um, and this is a plug for you guys in a sense, but in your experience, are you less likely to have a review done of your tax returns if it's done by a professional? Is there a correlation?
There is no correlation. There is no, some of it's chance. So some of it's just luck of the draw. Some of it might be, there's been a spike. So last year you claimed $2,000 of employment expenses, and this year you're claiming five. So their computer might actually say, wait a second, what's going on here? Some other points is if the computer might pick up on your return that you've claimed something that you can't. And they're saying, wait a second, I have a at-home space, but they're claiming capital cost allowance on their house. That might be a flag to the computer saying, hey, we need to take a closer look at this return. And it has been my experience, there's no rhyme or like they don't pick a certain office and say, hey, they're not doing so great, let's check more of their returns. They don't do that. Some of it's random and some of it's been flagged by a computer for some reason or another.
Yeah, I guess in today's world, it's not the human touch anymore. It's a lot of algorithms and
Yeah, and they do look at, if they are doing audits and they're finding mistakes in one particular area of the Income Tax Act, they will increase the amount of audits they're doing in that section because of those mistakes. So we see that a lot with people claiming moving expenses and employment expenses.
right, for sure.
Yeah,
Okay, the questions are coming in fast and furious right
I
now. So
see that.
I'll jump to some of those. So a question from Jeff here, just to clarify, are expense supplies only for what you purchased since working from home or for equipment that you already had in order to work from home? For example, a computer. I use it to work from home, but I had it pre-COVID.
Right. So the expense, as I outlined in when your employer's filling out the T2200, they put the dates that you were working from home. Your receipts have to jive within those dates. So no, I'm very sorry that you'd have a hard time making a case for a computer that you already have at home.
Okay. And unless you said that, yeah, no, I won't go into that. Okay, that's fine.
Yeah.
Um, um, when are the T2200 forms due from the employer?
Generally, they come along with the T4. So when sometimes people come in without one and we can fill that out for, we can actually send a client home with a statement of employment, T2200 for the employer to fill out, but really they come along with the T4 most times. So they'll get, an employee will get an envelope with their T4 as well as the T2200.
And does the employee have to ask for it? It's not a given. You have to ask, or will the employer fill it out knowing that you work from home?
Honestly, I hope the employer does fill it out. As I said in the past, you've had to have this on your employment contract as well. And where most of us have suddenly switched to working from home, we need to make sure that we're giving out these T2200s. So I would say, I'd hope the employer does, and if your employer does not provide you with that, I think you need to ask.
Fair enough. Okay, thank you. Someone has asked, can you please show again the allowable deductions for house owners?
There is really no house owners. It's more of, are you commission or not? What can you claim? So there's that slide again. Heating and utilities. Now, utilities does not include your telephone at home, does not include your internet. It really is your power, lights, water. No insurance, no property taxes, no mortgage interest. So really, if I was a homeowner, heat and utilities, repairs and maintenance, and that's it.
Right.
Yeah,
And,
unless they put cell phone as well, and then you want to claim a cell phone.
right. And it's really for the renters that have the ability to claim more.
Correct, yes. Now, you can't even say, well, if I had rented out my house, it's worth this much and I would have needed this space. You can't do that either. So it unfortunately is just for renters to claim the rent.
Yeah, okay. Another one, what about claiming bathroom and kitchen or eating area for lunch? So time you spend in those areas outside of the specific space you spend in your office.
That is a really good question, and you cannot claim that space either. So no maintenance or repairs, nothing for the kitchen, nothing for the bathroom. It truly is just that space, that 8x8 or 8x10 space that you're working with that you can actually claim against.
So you can't add in a couple more square feet to say that you spent.
Yeah, no, unfortunately, no, unless you're doing conference calls in there, you want to make that part of your office, but.
Or unless in your diagram, your kitchen and bathroom are in your office.
Right, and some people might be working in their kitchen. They might be at their kitchen table with their laptop set up. And in that case, really, you just want to put, the 8x8 space that you're taking up in your kitchen.
Yeah.
If you do have a space, though, that's exclusive, so you do have one room that's exclusive, you don't have to do a proration of time. So if you say, listen, I set up my basement, that's my home office, I'd be claiming the basement. If
Right.
you do your other personal internets, up in your living room and you truly do keep that space, you can claim that whole space.
Yeah, I think that's a great piece of information, and lots of people do get up and go down into a space, close the door, and that is their office space. So I think
Right.
that's a great distinction and very helpful.
Okay. I didn't ask, but if we could check and see if we do have some commission employees.
Anyone wants to jump in and acknowledge a commission, that we can go down that road as well.
Okay.
While we're waiting, so what about getting retrained or going back to school? Are there tax benefits around schooling and training?
Absolutely is. Now, that's not part of the home office, but there absolutely is. Again, that is another section of that T2200. I can do kind of like an off topic on that one.
Sure.
But yes, that's generally claimable training. Sometimes it's claimed under tuition, right? So if you paid more than $100 for a course, it's at a registered school, we might put that under your tuition. Convention expenses. So we really didn't get into travel with the employee expenses. We really focused on the home, but there is so much more to employment expenses that just we aren't covering today in the seminar.
Yeah, it's a much more detailed. Yeah.
Yes, yeah. So for instance, like I keep mentioning the commission employees, well, if you have a commission employee, the expectation kind of is that they will have to travel outside the office to meet clients, to go places, to connect with people, and they would want to claim some of their travel expenses for that. So we're kind of staying focused on salaried employees at home, but if you do have any questions, please don't hesitate to reach out.
Great, thanks, Crystal. And someone has asked if you could put the slide up with the discount on it, just so they can write it down, because it's not clickable currently. There you go. Okay, so we've managed to confuse someone, Crystal.
Okay.
And it's around what we are just talking about in the I think the T777, the claimable expenses and for homeowners versus renters. And so the question is kind of only rent, not the mortgage payment for house owners. And I think you said no.
No.
You answered.
Yeah. No mortgage payments, no mortgage interest. It's the cost base of your home that you're paying on to. So they don't consider that an expense. You're just, your house is increasing in value. You're just paying for what you already had. So I maybe aren't explaining why they don't allow it very well, but they just don't allow it.
Yeah, CRA is a mystery to even the experts in some ways.
They have their reasons. Again, because things like your mortgage is going to the cost of your house. So if you're looking at, say, capital gains or anything like that, we want to use the mortgage that you've paid on your house as part of the, calculation if you decide to sell the house.
Yeah. Yeah. Okay. Another question: what jobs would be able to claim parking? So again, maybe a little off topic, but maybe a simple answer.
Oh, travel. So if you, especially commission employees, if you're out and about, you have to do your thing, and your employer answered. Let me go back to that sheet. If your employer said that you needed to leave your home, then you can actually claim parking, and you claim the full amount of the parking. So there's usually, when you claim a vehicle, you have to prorate your expenses based on the kilometers you've driven and how much you've used for business and personal. And then you take all your gas receipts and you do the percentage, just like we did the work and space home. With parking though, as long as you claim the full amount.
Okay.
It
Wonderful.
really is for people that claim their vehicle and
Right.
claim travel.
Okay. Um, excuse me. Sandra has just posted on the chat for someone who asked for the link to the coupon. So we just Sandra just posted that link in the chat if you want to go there to
Great.
download that. Another question on the chat from Dorothy. A colleague had to repair his heat pump while working at home. Is that an expense that can be included in maintenance?
I would include that, yes. That's, I would include that, yes. I would not include a brand new heat pump, but I would include repairs to a heat pump to maintain heat. You need to keep the heat running or your pipes are going to freeze. There's so much into that. So yes, I would go ahead and claim that.
Okay, wonderful. That's actually the last of the formal questions. I have a couple others that
Okay.
maybe will be interested in, and not specifically. Oh, there's another one coming in, but I'll ask this one first. So for the folks that have claimed CERB, is there some guideline to how much they should be putting aside for their taxes next year?
I get that question every day from clients that call me. And it really does depend on your specific tax situation. The CERB will be taxable. So, most people, their marginal tax rate, if you look at what they're making, it can run anywhere between not paying taxes because they have tuition credits, they have other claims that they make, disability tax credit, to someone that's, in a high tax bracket, they might want to put up to 50% of it away.
Yeah, just to be safe and to cover them.
Yeah, if I wanted to be specific, I'd have to ask individual questions to see what kind of income the person has. If you're working, put away about 25%, I'd recommend, just to keep yourself safe.
Yeah, at least fall within a range that
But
would.
it is an individual question. So reach out to me if you in particular are curious. I would have to see, how much you're making with your employment income. Did you get any employment insurance? Because employment insurance does not tax at all. If at the most, they'll tax you 4% if they tax you at all. So these are the types of questions I'd have to ask in order to see,
Yeah, it's a personal question, but yes, you
it
should.
is.
The broad answer is you should be putting something away, but
Yes.
be
I
cautious.
think, with this panel of people, we're all working, and I think, yes, it would be important that we do put some of it away.
Okay, wonderful. Someone's, again, a little confusion around the internet thing. So can you explain the internet claim and why it cannot be claimed? Is it, if your job is to put on these type of Zoom presentations and conferences, and these are what is the business, then the job cannot be done without internet. So why can it not be claimed?
I 110% agree that we need to be able to claim our internet. The CRA, I'm sure, is looking into that, hopefully, but it has not been outlined outlined in the Income Tax Act. So it's as if internet doesn't exist to them or something, because they won't let you claim it as employment expense. I think, part of me in the back of my mind thinks that you're going to have internet anyway. And using it for business is not going to increase your internet bill. Your internet bill will still be the same whether you're using it for business or personal.
Yeah.
Yeah.
You did mention that the federal government is, I mean, which makes sense that they are reviewing the Tax Act based on sort of the pandemic and the fallout from the pandemic. Are you getting any hints at all of some of the things that they may be looking at changing or adjusting?
I'm sorry, I haven't heard anything.
No.
Actually, yeah. So my district manager, we put together this slide, and it is normal and very normal for the CRA to review these things regularly. So the income tax doesn't stay the way it is. People, take the CRA to court for things. Maybe someone did go to court with CRA and battle their internet costs, that $60 bill, I want to claim it. So it's when those types of things happen that CRA will actually take a look at things and say, you know what, this seems a little unfair. We went to court on it and, the guy got to claim his internet. Maybe we need to let people do that.
Yeah. Yeah. Okay, fair enough. And you said you thought that review would generally happen sometime in the December timeframe when they announce any changes. Is that
right? So maybe Raylene and Julie can answer more to that. I'd prefer that they did with those changes, because what happens with me is these changes happen. H&R Block will update their manuals, their policies and procedures, and then we go in for a training session, and we have to show them that we completely understand the information and attend as many sessions as we need to be able to do the tax returns. So I'm not sure when those changes happen before they end up in our book, but I'm sure Raylene could.
Yeah, I'll take that question. So we actually start from the prior year. When we're training on what the current tax return looks like. We're not training on what's coming, because CRA doesn't update anything for any of us until January. So when we get the information in January, that's why we do what's called a tax update with our associates, and that's what's new for the upcoming year and the new tax return. At this point, yeah, we're holding our breath and waiting, because we sent all of our employees to work from home from our corporate offices, right? So that's, we're waiting too.
okay? Great, thanks, Raylene. Another question, Crystal, you mentioned that it used to be that work from home had to be in a contract. Would it be beneficial to rewrite contracts going forward since COVID changed operations for the long term?
I would not. I've done a few reviews with clients, and they have not asked for the contract. They also specified in the Income Tax Act, and I'll read it to you word for word. Ordinarily, there has been express requirement within the terms of a written contract of employment. Nevertheless, such a requirement for the payment of office rent, supplies, or salary to an assistant may exist where the taxpayer can establish that it was tacitly understood by both parties, the taxpayer and employer, that such payment was to be made by the taxpayer and was in fact necessary under the circumstances to fulfill the duties of employment. So yes, but no. So I would not make that expense of redoing employment contracts, because they're saying here that as long as there's an understanding between you and your employer that this had to happen, then it's okay. And the understanding really is, if they have a question, you're going to have your details there at the bottom of that T2200. They'll reach out to you.
Fair enough. And this is kind of a question that is probably a fairly good summary of the webinar, and it's when you look at working from home, that's the specific topic today, and you can certainly go somewhere else with this, Crystal, if something jumps to mind. But what are the common mistakes that you think people will make when filling out their taxes when it comes to home office?
The main mistake is the internet. I mean, even we assume that step one, you need to have internet to work from home. So that's a mistake sometimes. Claiming things that they can't, like their mortgage interest or their mortgage. We see that too. You cannot claim your mortgage. We see people claiming the telephone, and they cannot claim their telephone connection either. So it's important that you remember to just limit your expenses to those things. The cell phone, if it's allowed by your employer, your maintenance, your rent, and utilities, and that is everything. So trying to reach and grab and make, well, what about this? I need this, I need this. No, try and keep it simple for yourself. That slide that I just showed, maintenance and repairs, rent. Yeah, heating and
And
utilities.
even cell phone, it's only airtime.
It is, yeah, and you have to show that your cell phone bill is reasonable. You have to show, you know, how much time you're spending using it, how much data you think you're using for work. You have to portion everything. So I know that I mentioned before that, and I'm going somewhere in my head, the carry forward, that if you can't use all of your employment expenses this year, you can carry them forward. That probably you will never probably reach the point of your earnings.
Right.
I think the only person that might do that is that person that started working at the very end of the year. So they have a full month's rent, and they've only received 2 weeks pay.
Yeah. Yeah.
Yeah.
That makes total sense.
It's very difficult to get a decent claim on the home office because of all the proration that you have to do.
Yeah. Yeah. Yeah, for sure. I was going to say, I've had some experience with, with self-employed people, and it's certainly a little different, but yeah, working from home office is very limited. Okay, I don't see any more questions coming in. We're a little early, but I think we'll wrap up. I'm just looking to see if there's any other last questions, and I think there's not. Someone has asked if the slides will be on our site, and we YouTube record all of these webinars. So if you go to our site and the YouTube recording, you'll see all the slides available there as well. So a very special thanks this morning to Crystal for taking the time, and Raylene and Julie as backup from H&R Block to walk our members and our guests through this presentation. Very informative, and I hope everyone that's been on has enjoyed our COVID-19 webinar series. We try to make these as timely and relevant to the current situation as we can. We're actually getting back to some in-person events here at the Chamber. We've got an actual golf day at Glen Arbor coming up on October 7th. And another new event called Wine on the Waves, which is a chamber wine and cheese on the tall ship Silva on September 18th. So for those that are interested, please go to our website and check out those events. Other than that, again, a huge thank you to our guests, Crystal, Raylene, and Julie. I hope people got some valuable information from this. Stay tuned. We of course have continuing webinars on COVID-19 impact and others ongoing. So we hope you find these informative. We thank you for joining us this morning. And on this note, we'll say goodbye and hope you have a great day.
Thank you very much.